Welcome to the Deep Dive. Today, we're looking at a pretty common challenge for retirees.
Yeah.
Those required minimum distributions, or RMDs.
Right, the mandatory withdrawals.
Exactly. But we're adding a twist. How do you manage those RMDs and still think about leaving something behind, a financial legacy?
It's a big question. And we've got an interesting case study today that tackles exactly that. It involves a 72-year-old woman, a specific financial product, and a plan.
Okay, so a real-world example. Let's get into it. What was her situation?
Well, she's 72, as I mentioned, and she came in with a $250,000 premium. Her main goals were, 1, figure out how to handle her upcoming RMDs without hassle, and 2, ensure her loved ones would still receive an inheritance.
Two very important goals often feel like they conflict. So what was the specific solution explored here?
The sources point to her using a product called the NAC Benefit Solutions Fixed Index Annuity. Specifically, the Benefit Solutions 10 version obtained via Diversified Insurance Brokers.
A fixed index annuity. Okay, how does that actually work to meet those goals?
Good question. The core mechanism involves how that premium was invested. It went into what's called a 2-year point-to-point index strategy.
Okay, break that down a bit, point to point.
Yeah, basically it means the annuity's potential earnings are linked to the performance of an index. In this case, the Morgan Stanley Dynamic Global Index measured over a 2-year period. So there's potential for growth if the index does well.
Tied to the market, but maybe not all the volatility.
Generally, yes. Fixed index annuities typically offer some downside protection, which many people find appealing. It aims for growth potential.
Right. And how does that connect to the RMD side of things, the withdrawals?
So the RMD withdrawals are set up to begin automatically in the second year of the contract.
Automatic. That's helpful.
Very. And what's really neat is that the amount withdrawn is calculated for her based on the current IRS guidelines, so she doesn't have to worry about calculating the correct RMD amount each year.
That definitely removes a headache. Okay, that covers the RMD management. But what about the legacy piece, if she's taking money out?
That's where a specific feature comes in. This annuity included a rider, basically an add-on called a Guaranteed Lifetime Withdrawal Benefit rider. Crucially, this rider also had a death benefit component.
A death benefit, so even with the withdrawals happening.
Exactly.
All right.
Even while she receives income, that death benefit ensures that there's still a designated amount available for her beneficiaries when she passes away. It's designed to provide both income and that legacy payout.
Interesting structure. So it's kind of doing double duty. Are there other features that make this work?
Yeah, a few things contribute. There's annual rebalancing within that index strategy, which helps keep things diversified. Also, it doesn't require active management from her. It's designed to be pretty hands-off for the client.
Makes sense. And the company backing it.
The sources mention it's an A+ rated insurance company, which adds a layer of, security and stability.
And you mentioned diversified insurance brokers earlier. What role did they play?
Well, firms like that often act as the intermediary. They help assess the client's needs, the RMDs, the legacy goals, risk tolerance, all that, and then find a suitable product, like this annuity, to create a tailored plan.
So they connect the person to the potential solution.
Precisely, helping to navigate the options.
Okay, so bringing it all together, what does this specific case sort of tell us about retirement planning today?
I think it really highlights how you can potentially tackle both income needs and legacy wishes simultaneously. It's not always an either-or situation.
Right. You don't necessarily have to drain the account just to meet RMD rules if leaving something behind is important.
Exactly. Using a tool that combines index-linked growth potential with guaranteed withdrawals and a death benefit, well, it's one strategy for pursuing that balance. It offers a measure of control and perhaps peace of mind.
It definitely shows how financial products are evolving to meet these kinds of complex dual needs in retirement.
It really does. And it raises a key question for you, the listener. How are you thinking about balancing your RMD requirements with any legacy you hope to leave? Are you looking into strategies that might help you achieve both? And what does peace of mind look like for you in that context?